Greetings, folks. You've reached DC Investing. I've reached financial independence, and I talk about topics that may help other people get to financial independence. And for fun today, I wanted to talk about what it felt like at the bottom of the financial crisis. And the reason why I thought I'd talk about this is there's a lot of new investors out there that have only lived during good financial times, or have only been investing during good financial times. And the mantra is buy the dip, buy the dip, buy the dip, and they've never really seen a big drop in the stock market. And if you've never experienced a major drop, you have no idea how scary it is. And so I thought I'd today talk to you a little bit about what I felt as an investor during the financial crisis and what I saw. Now I'm not predicting that this could happen again, but a drop can happen anytime. And Warren Buffett and Charlie Munger always say, if you can't stomach a 50% drop in your portfolio, you should not be a stock investor. So during the financial crisis, the market definitely fell by 50%. I think it actually fell by 60% during that time. And it was absolutely terrifying. I was working in an engineering job during that time. I had my 401k savings. I had saved, I don't remember how much I had, but it was something like $40,000 or $60,000 or something in a brokerage account. And I'm watching the things that were happening in the market. Now, I wasn't invested very much in the market, which I guess was a blessing, but it was just absolutely terrifying. And the feeling of what was going on was just really intense. And so some of the things that happened, of course, the bank stocks were doing all kinds of crazy things. And I think Citigroup fell to like $1. AIG went out of business, which was the insurance company behind things. JP Morgan and Wells Fargo went down a ton. And there was a money market account or two that had funds with Lehman Brothers, and they did what was called breaking the buck, which means they actually lost the dollar rate and went negative a little bit. Let me tell you, that scared us a lot. I had, with the funds with Fidelity, you're invested in money market accounts if you have your core account invested that way. And the thought that the money market accounts would break the buck was terrifying to investors. And it was so scary that the government came out and increased the insurance limit on money market accounts because we were all just kind of going crazy, not knowing, you never knew where your investments were. So I ended up pulling a bunch of cash out of my Fidelity account and brought it to, I had a bank account at Chase, which later became JP Morgan Chase. And the reason why I did that is because my mortgage was with that same company. So I figured, hey, if banks are failing, I want my cash in the same place that I owe my mortgage to, so that if something happens, the bank goes out of business, I can say, you owe me $60,000. I just to cancel it out with my mortgage. And the reason why I did that, we were just scared. It was terrifying. You turn on the news and, they're talking about, the government meeting, emergency meetings going on all the time, and the stock market's tanking. And I also did, I was working as a side job. I was working as a entertainer for a movie complex that had a family entertainment center. It was a Carmike movie theater chain. And I think their stock had been trading somewhere around like the $10 level. I had thought about purchasing shares in it since I worked for it, but at the low of this finance crisis, it went below $1. I think it got in the 80-cent range at some point. And I remember looking at that and like, are they going out of business? They have a big building. There's people that are still coming, but things were so crazy, you just questioned everything. All of the businesses, and I looked at that and like, it's so low. It's $1 a share. Should I buy some? That was kind of the question. And I don't think I pulled the trigger right then because it was just so scary. and then it kind of went up a little bit, and you don't pull the trigger on buying shares because you're like, well, it's just going to fall anytime now. And kind of looking past that over the next couple of years, it was interesting that those shares of Carmike theater chain went all the way up to $20 a share. And if I had had the nerve to buy some of those, I think I may have had about 10 grand or something I was thinking of investing. Well, that would have turned into 200 grand. But I didn't pull the trigger because it was terrifying. We were so scared. We didn't know what was going to go out of business or what wasn't. There were 4 lease signs that went up all over the place. A lot of businesses went bankrupt. There was vacancy all over the place. A lot of strip mall places had major businesses that, just closed up shop. And, all around, it just felt like the economy was hurting. The prices of houses fell like crazy. The stock market, everything fell, whether it was a good value or it wasn't. And it just terrified us. And then, the stock market bottomed. The Federal Reserve came out and said, we're going to buy a bunch of mortgage-backed securities. They lowered interest rates, and things started to recover. I remember Investors Business Daily published a full page ad in the Wall Street Journal or something that said, all right, enough's enough, guys. Look at America. We're doing fine. We're kind of moving, but it was like nobody trusted it. Somebody else put out a thing that said, the S&P 500 now has a yield over 5%, and you can borrow a margin account at something like 2.5% or something. So do the math. That works out in your favor. But I had seen the stock market drop, and I was terrified. I was really scared. I did not trust that the nation was not going to fall apart again. And I remember people coming on in the months on the finance podcast and the time after that, and they're like, hey, I think the base is in. We, the time is okay to buy now. I think you'll do better in the future. And I remember just balking at that. I'm like, there's no way. I mean, things are so shaky. It's just not going to happen. And I missed out on, buying in at those lows. I missed out on several of the years following that. I really wasn't in the market. I actually ended up taking the cash that I had pulled to the local bank, and it ended up paying off my house completely during that time, because I figured, if the financial market falls apart, at least I own my house. And so, in the end, that turned out to be okay, because interest rates had been higher before. I think I had a 6%, six something percent interest rate originally. I did refinance for a 15-year loan at like 5% or something. I could have refied my house in the financial crisis at a lower rate, but again, I had just paid it off because I was so scared. And so I just thought I'd share that experience of what it felt like to be an investor, to just a worker. I'm got young kids and a family. I've got a house, a mortgage, not a whole lot invested, but that time was terrifying, and everybody was scared. We all sold. We moved our finances around. Money market accounts were breaking the buck. Banks were almost going out of business. Stocks were crashing like crazy. The movie theater that I worked at on Saturdays went all the way down below $1 a share. It was really scary. So I just thought maybe it would be fun for you guys to hear from a first person view for someone who went through that. I guess it's been like it's almost 20 years ago. And so there's a lot of investors that weren't around at that time. All you've ever seen is a market that goes up. But these crises can happen. No one expected the whole market to fall apart. No one expected Lehman Brothers to go out of business. And it was just crazy. So Lehman had been the market maker for the defense contract that I worked at as an engineer. They helped to bring it public. And I remember some of our executors saying, I just can't believe that the mighty Lehman Brothers that we were involved with went out of business. And it was crazy. So that's what it kind of felt like as an average person to go through the financial crisis. It scarred me. I never trusted the market all the way up. It was the perfect time to buy, but there was so much fear in the market that it just scared a lot of us out of that market. So, take that to heart. It could happen again. Um, and just know that certain things happen that scare people to their core, and it really affects your finances and the world's finances. And it took a long time for the market to recover after that. So that's kind of what it felt like to actually go through it. I guess I've got a few subscribers here. If you have, if you went through it and what it felt like, leave a comment below. Um, if you think that could happen or not happen, leave that. I know the comments help the channel, so appreciate any input. Like, subscribe, and we'll see you. Bye.